In 2025, CEOs and founders sold over $16 billion in stock. Meanwhile, they're on CNBC telling you to buy. Let me show you what I found. Picture this. You're scrolling through financial news, seeing executives hyping up their companies. Rockets to the moon, unlimited potential, the future is now. But behind the scenes, they're quietly dumping shares. Bezos sold $5.7 billion. Michael Dell sold $2.2 billion. Jensen Huang from NVIDIA? Over $1 billion. I spent the last 30 days tracking this insider activity, cross-referencing it with what these CEOs were saying publicly. And honestly, the pattern is disturbing. Here's the thing nobody's talking about. 89% of the companies are seeing more insider selling than buying right now, a decade-high pessimistic pace. And I'm going to show you the 3 red flags that separate normal insider activity from get the hell out signals, so you can actually protect yourself instead of being the last one holding the bag. Act 1. The data reveal. So let me walk you through what I actually did for 30 days. Every single morning, before the market opened, I pulled up the SEC's EDGAR database. That's where all insider transactions are legally required to be filed within 2 business days. Form 4 filings. They're public, they're free, and they're basically a cheat sheet for what the smart money is actually doing versus what they're saying. I tracked 47 CEOs across tech, finance, and retail. And what I found was a pattern so consistent is almost insulting. Let me show you the receipts. Pattern number 1, the Palantir Playbook. Take Palantir, stocks at $67. CEO Alex Karp goes on CNBC in October, talks about how AI is transforming everything. Government contracts are expanding. The future is so bright you need sunglasses. 3 days later, Form 4 filing. He sold $28 million worth of shares at S65 to 68. Now here's where it gets interesting. The stock hit $73 1 week later. Everyone on Twitter's celebrating. Then it drops to $52 by December. Karp? He's already out. He sold at the top while telling retail investors it's just getting started. Pattern number 2, the cluster sale. But it's not just one guy. Here's the thing that really freaked me out. When I mapped out all 47 CEOs I was tracking, 31 of them sold stock in the same 3-week window between late October and mid-November. That's 66% of them, all at roughly the same time. Bezos, Zuckerberg, the Walton family, Salesforce executives, they're all filing Form 4s within weeks of each other. Either that's the world's biggest coincidence, or they're reading the same economic tea leaves that retail investors don't have access to. Reality check. This isn't illegal. Now, before you grab your pitchfork, this isn't illegal. CEOs are allowed to sell their stock. In fact, most of these sales are done through something called a 10b5-1 plan, which is basically a pre-scheduled selling plan that's supposed to avoid the appearance of insider trading. But here's the loophole. They can set up these plans with a lot of flexibility. They can modify them, they can cancel them, and conveniently, a lot of these pre-planned sales happen right before bad news drops. Funny how that works. Act 2. The 3 red flags. Alright, so now you're probably wondering, how do I actually use this information? Because not all insider selling is a red flag. Sometimes CEOs sell for totally normal reasons. They're buying a house, diversifying, paying taxes, whatever. So let me give you the 3 red flags I use to separate noise from actual warning signs. Red flag number 1, volume spike. This is when a CEO who normally sells, let's say, $2 to $3 million a quarter, suddenly dumps $50 million in a month. That's not diversification. That's urgency. When you see a 5 times to 10 times increase in their normal selling pattern, pay attention. I saw this with multiple CEOs right before their companies missed earnings sales. Red flag number 2, multiple insiders at once. One CEO selling could be nothing, but when the CEO, CFO, and 3 board members all file Form 4s in the same week, that's a coordinated exit. They know something. I saw this happen with a software company in November. CEO sold $40 million, CFO sold $15 million. 2 weeks later, they announced a revenue miss and the stock dropped 22%. The insiders were already out. Retail investors? Holding the bag. Red flag number 3. Selling during hype. This is my favorite because it's so blatant. When a CEO is on TV saying, "We've never been more excited," or "This is just the beginning," and they're flying sell orders that same week, that's your signal. Words are cheap, actions are expensive. I tracked 12 companies where the CEO made bullish public statements while simultaneously selling. 10 of those 12 stocks were down 15 to 30% within 90 days. They knew. You didn't. Act 3. How to track this yourself. Okay, so you're probably thinking, this sounds great, but I don't have time to track 47 CEOs every morning. I get it. Marcus from Seattle checking his Robinhood 30 times a day doesn't have time for this. So let me show you how to do this in 5 minutes a week. Step 1. Use free tools. Go to openinsider.com. It's free, no sign-up required. This site aggregates all Form 4 filings and makes them actually readable. You can filter by company, by industry, or just look at the biggest recent sales. I check this every Monday morning while my coffee's brewing. Step 2. Focus on your holdings. You don't need to track everyone. Just track the companies you own or you're thinking about buying. Set up alerts for insider activity on those specific tickers. If you own Nvidia, watch what Jensen Huang is doing. If you're eyeing Tesla, watch Elon's filings. Though, fair warning, that man's Form 4s are a full-time job. Step 3. Look for patterns, not single sales. Remember, one sale doesn't mean panic. Look for the red flags we talked about. Volume spikes, multiple insiders, selling during hype. Those are your signals. Here's the thing nobody wants to say out loud. The stock market is not a level playing field. Insiders have information you don't. They have access you don't. And they're making decisions based on that information while telling you everything's fine. But now you have a system. You can see what they're doing, you can track their moves, and you can decide whether you want to be the person buying when they're selling or the person who actually pays attention to the receipts. Does this mean you should panic sell every time a CEO files a Form 4? No, but it means you should know what's happening. You should ask questions. And you should protect yourself instead of trusting someone whose incentives are completely different from yours. If this was helpful, do me a favor, subscribe so you don't miss the next one. All right, that's it. Stay smart out there.